We all experience change. For those who have been trading for some time, think back to when you first discovered the Forex market and just how overwhelming it was. Now think of how far you've come. Anything you do facilitates change, whether you're aware of it or not. The same thing happens with indicators on a different kind of spectrum, meaning the market is rarely static and is always in motion. Price is constantly moving and indicators react accordingly, some quicker than others, as we've all observed. Today we're going to take a look at yet another indicator cousin. Many of us have heard of and perhaps used the rate of change, also known as the ROC. If you recall, VP made a video of it some time ago. This cousin has additional features including smoothing and custom processes. It also has a special feature called normalized, meaning that it goes one step further to calculate the ratio of the difference between raw data and divided by the standard deviation. These extras are what it makes it, well, extra. A rather esteemed gentleman named Carl Swenlin furthered the work of the ROC, which was developed by another all-star named Morton Baratz all the way back to the 1940s, so you know this might be something special. It does cross a zero line, but we don't use it this way. In fact, we use it as a below chart, two lines cross, confirmation indicator. We enjoyed running the analysis on the Euro-New Zealand dollar with the last analysis, so we thought, why not have a second helping of goodness to see how this does? We'll pick it up right here with this first short signal. This first trade is awesome and quite saucy. Lots of profit here. Now the long. Here's that weird spot we talked about last week. You'd probably have the same results, but with a better entry. Profits on the first half, and it looks like you'd be pulling in profits on the second half as well. If you stuck it out until the signal, it probably would have been about the same as your trailing stop. A fantastic run down, great profit, and an excellent exit. Now the long, pretty close to the bottom. You'd have definitely gotten out with the first half of your trade in profits, and depending on the ATR, it might have been a crapshoot with the second half. At worst, it would have been break even, and that's totally fine. We've got another one out of two halves here. Again, half of a whole is better than all of none. Now, a long with strong movement. Well, yeah, you can take that one to the bank. What can we say here other than holy moly on that trade? Weeks of generosity and profit to fatten your account. And this last and most current trade ends with a big smile. That trailing stop would have been following you like a puppy on the way home from school. What can we say? This indicator did so well on this pair, but will not be cherry picking, so don't expect all future analysis will be on this pair. That would be too easy. We want tricky, difficult, and moody charts to verify our indicators. They have to perform for us like a dog and pony show under a 3-ring big top. Now, go get it from the Stonehill Forex Indicator Library at no cost so you too can get busy with it. The link is in the video's description. Not earth-shattering, but still no. We won't offer financial advice no matter how much you rattle us. It just won't be something you need, as you can do this by yourself and we can help. Our only goal is to make you a better trader.